Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter, see what people are talking about on social media, generally related to three topics: wealth building, commodities, and/or financial topics. I'm going to interject my financial opinions as we go. So let's see what's going on in the social media space. You can find me at finding_finance, and you can join our community, finding-value.com. If you'd like, we still have a discount going on, LEAP, LEAP, because it is leap year. And that's where I go and dive further into individual companies, sectors, trainings, etc., etc. There's a lot. So coming on down to trader, Palladium. Today, Palladium gave us an engulfing candle. Palladium continues to form what's known as an inverse head and shoulders bottoming pattern. This pattern looks a bit like a person's head and shoulders, but upside down. It often indicates that prices might start going up after a downward trend. But here's the catch. We're not sure yet which way it will go. We need to watch two key things. One is the right shoulder. If prices drop below this level, it means the pattern isn't working out and prices might keep going down. The other is the neckline. If prices break above this line, it's a strong sign that prices are going up. Right now, we're waiting for one of those things to happen to confirm the trend's direction. This situation's a bit like a game of wait and see for traders. So he's relying completely on technical analysis. This is from a huge downtrend in Palladium. Now, one thing that I look at is the cost curves. And if you go below the high cost producers, they will cut back production. Right now, some of the mid to low cost producers are cutting back production on platinum group metals in whole. So palladium will get cut back, rhodium will get cut back, and definitely platinum. Platinum is still running a major deficit. I think the physical metal of platinum is really good in terms of pricing for a longer term hold where we are today. The big boys cut back production. Palladium is most likely going to go higher. That is my guess, but platinum would be the one that I would look at. That'd be my first pick over palladium. Inverse Apple working on a 12-month breakout this week. Remember, this is inverse. So you do a nice little pattern through here, and it's breaking out to the downside because this is an inverse Apple ETF. So we're seeing a lot of weakness in Apple. Here's some more. So that's closed for Super Tuesday. All of the big cap tech was down today except NVIDIA. It's clear that NVIDIA will be the last stock that gets sold, and that will be the job of margin clerks any day now. So we've got to turn lower in Meta, Amazon, Microsoft, Google, Apple, and Tesla. And NVIDIA's our last Hans Solo hanging out before the fake out, before the breakout lower. That's what I'm going to say there. This post didn't get one like. This is the Huey divided by Apple ratio, multi-decade wedge breakout. Look at this thing wedging out and then boom, breakout for the Huey. Gonna move to, I don't know anything that rhymes with Huey. And then this is the longer, bigger picture view of the Huey, basically potentially coming into a falling wedge and breaking out to the upside against Apple. And really what this is, it's not so much against Apple. Sorry, guys, I see that this isn't on your chart there. It's not so much about Apple. It's more about Huey versus the technology NASDAQ index. That's really what it's about. And I think we're probably pretty close to a potential bottom here, or the NASDAQ is close to topping. And that's where we're going to get our big outperformance of gold, precious metals, and maybe even the gold and silver mining companies in relationship to technology. That is the rotation. It's the sector rotation and money flows that could potentially be changing right now. And I know Stan Druckenmiller, he bought some gold and silver mining companies and probably got that business cycle nailed down quite well. Here's URNJ versus Ethereum. We're looking at the potential chart pattern. So he's got the overlay of Ethereum and the over URNJ, and we could see a potential move higher. if the fractal repeats like that. We also have Ethereum versus, this is just the Ethereum chart to show you guys. And right now we're going through that kind of big hump that's scaring everybody. Okay, just get scared out, I guess, but I'm not scared out. It takes a lot to get me scared out of things. So Luke Roman, when gold rises in your currency despite positive real rates, the gold market is saying your government will have a debt spiral if real rates remain positive. Gold began warning of this in late 2022. Numerous other markets have since begun playing by this new set of rules. So this is really your 10-year TIPS yield. You can see it coming on down. That means yields are going up. Gold price continues to work its way on up. So we see a divergence between the way gold has acted the past 40 years and and how it's acting right now. We could see a big move to the upside in gold, even if yields continue higher, because people are worried about the value of the dollar and bonds. On back. We've got, this is Bitcoin. Bitcoin. So Bitcoin, there we go. There's Bitcoin. We've got a 1, 2, 3, 4, 5 at the top, potential topping pattern. 1, 2, 3, 4, A, back up to B, and then I think we're probably getting an ABC correction, which is a consolidation zone. So we could see this pull back in the short term for Bitcoin. We do have a large bearish engulfing pattern at the top here for a candlestick, which could indicate that we could be doing that very soon for Bitcoin. Paul says 33% believe supply and demand is loose in natural gas. Another 22% believe it's neutral. Nat gas bulls finally have a great setup for the first time since May of 2022. Their belief is our buying opportunity. So that is some information and opinions on what he sees in the natural gas market. Trader says, what is Bitcoin in reality? It's a software. With time, better software and networks will be born. Bitcoin will go to zero. Now it's at $69,000. Maybe that's the case. That's kind of how I view it. Right, wrong, or indifferent. But I do think Bitcoin will go to zero. The question is, what is the path and how long will it take? That I do not know. But I do think eventually this guy will be right. Here's Apple, bounce or suffer the consequences. Looks like we're going into a potential low volume vacuum below us where we could really move lower if the support zone that this guy has drawn in here doesn't hold. We've got Bitcoin again. So Tony Greer says, I just want to point out the outside reversal in everyone's favorite security, Bitcoin. I'm not shorting it. I'm not bad-mouthing it. I don't even want people to think I have a negative attitude toward Bitcoin, but that is a reversal after an ETF launch. So let's see what happens in terms of Bitcoin and the potential reversal candlestick that we just got. Is it going to move lower? It looks like it to me. What I'll say, it's got a bearish engulfing pattern that we're seeing on this, and he's got the reversal here in a different format. He goes, what is wrong with the uranium market? Encore now is the only USA producing company. Reports today a fifth signed long-term contract at close to spot pricing. Has delivered, is ramping up production at 3 mines, and the effing stock is down. What the hell am I missing here, people? Well, it's just based off sentiment, guys. Sometimes you get some selling pressure in the markets, irrespective of how good the news is in relationship to any one stock within that sector. When I did my analysis, not just uranium analysis, but when you do the overall market analysis, commodities move together and the stock market generally moves together with stocks. So you've got commodities that are separate than the equities, not the equities as in the commodity equities. I'm talking about technology stocks and stuff like that. The whole groups move together. They move in herds. So The herd is moving down at this time. So the one stock that reported good news may still go lower because of the herd. The herd's going to drag it down. So it, you got to just be patient. And the market's going to go, it's going to flip from positive sentiment to negative sentiment to positive sentiment. And you're going to get these big moves higher, even if the entire time the backdrop of the fundamentals are great. And another thing is the overall market, if we go into a pullback or a recession, it may impact the uranium stocks irrespective of what the fundamentals look like in uranium. And that's part of the game. You need to know what game you're playing and how the game is played. And maybe the fundamentals are so strong that it's going to overpower the recessionary or the let's say the down move in the Nasdaq or technology stocks. It those are the forces that you can be aware of, but you still don't know if you're going to go up or down based off of how strong either one of those forces are and impacting the stock itself at that particular time. And that's what makes investing so difficult to try to play in the short term. I don't play the short term because you don't know which force is going to be greater. So you look at the fundamental long term, you stretch your time horizon out, and then you just ride it from the fundamentals. You don't try to time it in the short term because sentiment can move you in either direction, irrespective of the underlying company or the fundamentals of the sector. That was a mouthful. So, yes, Encore's a great company. Yes, they're doing great things. And all I'm going to say is keep riding this bull. Keep riding the bull. Don't get bucked off. So JC says, which part of the cycle is this, you think? Lamborghini sells all cars sold out till 2026. Yeah, we're doing real weak here, boys. Real weak economy. When memes become reality, Apple, you can see how we've broken to the downside here. Not looking too hot. The labor force participation rate has broken above trend. So this is some actual counter information where the economy could be strengthening. I know a lot of people think it's weakening and we're going to get this big recession, but this is showing that maybe we're going on up. Maybe interest rates have to continue higher because of all of the debt that's issued and the economy. Maybe it isn't as weak as we think. I don't know. I'm just looking at this and it's still going up. Another example of changing EV narrative. EVs release more toxic emissions than petrol-powered cars and are worse for the environment. This doesn't even include the mining necessary to get the battery metals. Also didn't think about tire tread issues. So electric cars release more toxic emissions than petrol-powered vehicles and are worse for the environment. EV weighs about 30% more than petrol cars, causing tires to wear out faster. The tire tread releases toxic particles 400 times greater than exhaust emissions, according to this article here. So net gas, holy frack, production is at 99 billion cubic feet per day, and that is way below actual demand. So we are getting drawdowns, and we'll probably see it in inventory here pretty soon. So this is the natural gas production, 104, 103, 102, 101, 100, down all the way to 99 billion cubic feet per day. If history is any indication, the current 4-month rally by the S&P 500 is likely a post-recession rally or a bubble. Which do you think it is? Martin says it's a rally. That's his opinion that we're coming on up. This is post-COVID rally. I think it's a rally based off of a slowdown that occurred in 2022. I agree. It's a rally. Then we can still get a correction though. Athabasca Oil, lots of staff buying shares under the purchase plan. Imagine that's a happy office. Yeah, I would be using their purchase plan as well. I work there. Nat gas storage isn't for storing, not in the way that most people think. It's not strategic petroleum reserve for gas. The purpose of storage is to flatten daily demand to its annual average. On days where demand is above the annual average, you withdraw the shortfall. On days where the demand is below, inject the extra gas into storage. It's just a buffer for the system is what that is. So here's GLD. GLD finally broke out over $195. Triple top breakout triggers along on 04 March of 2024. So we just have a point and figure chart that's broken out to the upside, which is a triple top breakout for GLD. Looking good, gold. And that's what I've got for today, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website, and we still have that discount coupon code LEAP, LEAP, if you're interested. Put that in the coupon code for a 50% discount on the monthly for the first month only, or you can get a larger discount on the yearly membership. So you can check into that. We have a question and answer session coming up on Sunday at 5 p.m. So that's all I've got for today, guys. We'll catch you later. This is Finding Value.